Let me tell you about a time where a client of mine was trying to donate money to the IRS by accident. The client sold their rental property for $500,000, but they bought it for $300,000. So they made a profit of $200,000. The capital gains tax rate is 21%, so the client was assuming that they would have to pay about $40,000 in taxes. As I was preparing the return, I asked the client, have you ever lived in this property? If so, how long? The client mentioned to me that they lived in the property the first 2 years and rented it out the last 3 years. And they owned the property for a total of 5 years. As a tax accountant, hearing that, the light bulb went off in my head because I'm all about saving my clients money. The client was unaware under IRS Tax Code Section 121 that if you lived in a property 2 out of the last 5 years, you do not have to pay capital gain taxes on $250,000 if you're single and $500,000 if you're married. And it does not have to be consecutive. You could have probably lived in a property the first year, rented out the second year, lived in it the third year, rented out the fourth year and the fifth year, and you would still qualify. Another thing my client didn't know is if the gains is under $250,000 and you're single and $500,000 if you're married, you do not have to report it in your taxes at all. It's completely optional. I was able to relate that information to my client, and of course they were happy. In conclusion, don't donate money to the IRS. Sometimes it's best to go to a professional. Follow for more tax tips.